Hi and welcome in a new video. In this video, we're going to take a look at the 1-inch exchange. If you like the sound of paying less gas fees, if you like the sound of having the best rate possible for your token swap, then I suggest that you keep on watching, hit that like button and subscribe to the channel. So the first question we're going to answer is, what is 1-inch? And as you can see on the front page, 1-inch is a DEX aggregator. This means 1-inch is like Trivago or an Expedia, but then for DEXes. Personally, I always like to dive a little bit into the history, so I went to the 1-inch V1, which is the legacy page. Then we take a look at the FAQ. We get a little bit of history about the 1-inch protocol. So 1-inch was launched in a hackathon project at ETH New York in 2019. The project was created and developed by Sergey and Anton Bukov. You can click on the links to follow them on Twitter. Then I have a little here. I assume this is still valid. So 1-inch protocol is not fully on chain because it has integrations with the order books of 0x and AirSwap. Now we're going to dive into this one a little bit deeper. So rather than just finding you the best swap and facilitating the best swap, they also have an option to let you save on gas fees, and this up to 42%, and that is definitely something that got my attention. Of course, this is not everything. You can also provide liquidity on the 1-inch protocol. This feature was launched under the name Mooniswap during the DeFi summer. Now, why is it interesting? Well, the biggest problem with liquidity providing is impermanent loss. If you don't know what impermanent loss is, be sure to look it up before you provide liquidity to any project, because it is really important to keep that in mind. Now, the way they try to limit the impact of impermanent loss is that they catch a portion of the price slippage profits. This means that the fees that you're getting for the swaps are higher than on other platforms, and this way, hopefully it compensates your impermanent loss. Now, how is this possible? Well, basically, when a swap happens, a market maker does not automatically apply the invariant algorithm and displays the new prices for the upcoming trades. The AMM improves exchange rates for arbitrage traders slowly, so this is the big difference. They have a little time delay, and this time delay allows them to catch more of the slippage. So to quickly sum it up, we have a platform that finds the best way to swap your token, and it offers a way to limit your gas fees. On top of that, you can use it to provide liquidity for different pairs, and they will try to limit your impermanent loss. So these three things are definitely something to look forward to. And after the big success of the Uniswap token, it doesn't come as a surprise that they also launched the 1-inch token. This happened at the end of last year on December the 25th. As you could have guessed, the 1-inch token is a governance token, and it actually gives you quite a lot of power. So there's definitely some value in the 1-inch token. Now, if you used 1-inch before the 24th, it might be worth checking out these things, because you might be eligible for some free tokens. So if you did some trades before the 15th, you're eligible, or if you did 4 trades in total, or for a value of just $20, which is really nothing, I think, you are already eligible for some free tokens. So why did I say that the 1-inch token is an interesting governance token? Well, basically, you can continually use it to determine the fees that you're getting as a member of the 1-inch community. So you can actually go to the website, click on governance, and then you can vote on all these things. So you can have influence on the swap fee, the decay time, the referral reward, governance reward, price impact fee, and so on. So anyone who has a token, so there is no minimum to vote. If you have the 1-inch token, you can start to vote. Of course, all of this sounds really great, but how the hell do they make money? So 1-inch doesn't charge any fees on top of swapping tokens. Of course, all the different projects like Uniswap, Balancer, and so forth, they do charge a fee. For example, Uniswap charges a 0.3% fee on the swaps. And of course, you'll have to pay these fees on your swap. Then how the hell are they making money themselves? Well, they have an agreement with all the platforms that they integrate, and they get a portion of that fee that is being charged by that platform. So it's important to know, no, it is not free to do a swap, but they are not adding fees on top of the regular fees being charged by the different platforms. Alright, now that we know how the 1-inch project works, who's behind it, and what the benefits are, it might be interesting to know what the token distribution is before you jump in and buy that 1-inch token. The first thing you will notice is that a big portion is not going to the community and that more than half of the token is being given to the core contributors and the investors. Thankfully, when you look at the release schedule, they will only be getting control really at the end. Alright, so how does it all work? Well, you click on exchange, then you can here do a market order, and this is so interesting to me. All the swapping protocols, it is just swap and take what you can get right now. But here on 1inch they got a limit order, and I'm so happy to see a limit order option on a DEX. But let's just go for a market order. Let's just change 1 ETH for some DuckDAO Dime tokens. You can then choose for maximum return or lowest gas fees. Let's go for maximum return. It will then take a look at all the dexes that have the DIDIM token. Of course, sadly, it's not that many. Let's take a look at DAI. There's probably a lot more choice. DAI stablecoin. There you go. So yeah, you see there are a lot of dexes integrated. We even still have Mooniswap here, Kyber, Oasis, Sake, SushiSwap, and so forth. And apparently Uniswap V1 is the best place to go to. In this case, they're also not splitting. I think the swap, they're just going to use Uniswap V1 as the best match. Then when we click on advanced settings, there are a lot of features that you can play with. So you can, of course, change your gas fees that you want to pay, the amount of liquidity sources. Apparently they have 43 different dexes integrated, so if you don't want to use specific ones, you can just remove them from the list. You can decide whether or not you want to show this comparison table, so some charts. So you can change everything on the dashboard in a very, very easy way. And this is pretty funny. They show you the route that your swap is going. So if you have multiple dexes going through, then they'll show you, for example, 10% is going through Uniswap, 50% is going through Balancer, and 5% is going to DeFi Swap, and so forth. It's a little bit like you can see when you book a flight and you have multiple transfers. So it's definitely a good comparison, I think. And the last option that we have in our dashboard is Activate Chi, and that's the little dragon right here. So if you want to save on gas fees, this is definitely a must. So going back to our FAQ, they have a little explanation on how it works. Of course, you can dive into the white paper if you want to have more details. But basically, the 1inch protocol tries to buy the gas token at a low price, and then it uses it, it burns the gas token when you do some transactions. So this way you can save up to 42%, which is definitely interesting. So initially they used the GST2 token, and then they made their own upgraded version, which is called the Chi gas token. Now, very important to know, you don't just press that Chi button, you actually need the Chi gas token. Now, why would you use Chi over GST2? Well, basically you save another 1%, as you can see right here. Where do you buy the Chi gas token? Well, you can find it on CoinGecko, and of course you can buy it on the 1inch platform, but you can also get it on Uniswap, MXC, and a few other exchanges. So yes, you will have to buy the Chi token before you can use it, and yes, it would have been nice if you would have bought it in November and you didn't have to buy it now. Then we're going to quickly go over the last features that you can find on 1inch. As I said before, you can stake and pool your tokens, so you can provide liquidity. Just click on DAO, then go to pools, and you'll find the different APYs and the different liquidity pairs that you can invest in. And then we have the liquidity farming from 1inch. So it's not just liquidity pools that they have, but you could invest in the farming protocol as well. This means you're not just getting your cut of the fees, but you're also getting additional 1inch rewards. So in my opinion, this is more interesting as just providing in the pools. So just take a look at the farming, because then you'll get additional rewards on top of the fees that you would get in a normal liquidity pool. But again, before you jump into this, please look up what impermanent loss is so that you know what you're getting into. So the general guideline is, if you don't believe in both tokens, then don't provide liquidity. If it's a pretty new token or the price is very unstable, then be sure that the rewards are high enough to compensate for the impermanent loss. Alright, this brings me to the price of the 1inch token. I didn't buy any yet. I'm going to take a look at how the price is going to consolidate, and then maybe I'll do a small investment. When looking at the launch price, I think it peaked at 2.7, and then in I think a week ago, yeah, we broke that all-time high, and now it seems that we are trying to get above that $5. We are currently at a market cap below 500 million. That puts us on rank 79. Let's compare it to, for example, a Uniswap, which has been doing very well. So if you got those tokens for free and you kept it, I can imagine you are really happy. So let's just assume that we continue with this bull run. Then I think it is not unthinkable that the 1-inch token will move up to 1.5 billion in market cap, so that would be a 3x. And I think the token itself is just getting started, so it wouldn't be nuts to think that the price, for example, will do a 3x compared to the initial launch price. And then if the market keeps on pumping, then we might be able to see a 10x. So I think a token price of $35 up to $45 is not too unrealistic. If you then keep in mind, new dexes are coming on the market every day, so if they're able to give you the best possible path for your swap, and they are able to allow you to save on gas fees, and on top of that, they give you better liquidity pools, better farming options than most of the dexes out there, or most of the DeFi projects out there, then I think they have a very nice combination that should get a lot more attention in the upcoming months. Then there is one more gem that I would like to share with you. This is given to me by somebody on Telegram. If you go to this website, you can see the gas prices at different times throughout the past week. You have also a little graph where you can see what the best timing and the best day is to do your transactions. So how can you use this? Well, as you've seen in the advanced feature on both Uniswap or any other swapping protocol, you can choose your own gas price. So if we see that the gas price went down to 54 here a bunch of times, also in 50s, and then went all the way up to 100, even 200 here, then it might be interesting if you're willing to wait to just fill in one of these lower gas prices and not use the suggested ones. This, of course, might mean that you have to wait a few days for your transaction to be picked up, but I think right now this can actually be worth it to wait a few days and save 50, 60 euros or more on a transaction. Alright, that's it for this video. If you made it all the way to the end, don't forget to like and subscribe. We're almost at 1,000 subscribers, so that is insane. Really big thanks to you guys for the support. Also be sure to leave a comment, because that will help push this video in the YouTube algorithm. Thanks again for watching, and I'll see you guys in the next one. Bye.